To understand ordinals, we need to understand what are NFTs, how the blockchain is structured. In the first iteration of the web, you just had information being given to you, being provided to you. And everyone had their own websites. You had things like Yahoo, right, which were giving you the news, etc. There was no interactivity built in. Now, the second iteration of the web, what is called Web 2, is where you could start searching for information. And that's where Google came in, and you could also start interacting with other people, right? So you could also have a social network. You could interact with other people like Facebook, MySpace, Orkut. All of these were very popular. In Web3, what happened is that now all that interaction between the people and who is serving you the information, all of that is controlled by companies and it's centralized. So the basic premise behind the blockchain and Web3, etc., is that you build everything in a decentralized way. Now, decentralization has two key aspects to it. One is data being decentralized, and the second is even your computation, right? Where are you storing the programs? Everything being decentralized. Bitcoin is nothing but movement of software into money. Again, in a decentralized way, right? You had software in money, you had, banks having their online operations. A lot of currency right now is online, but it's still controlled by centralized banks and central governments and central entities, companies as well, right? Like MasterCard, Visa, which basically help you do the transactions. In India, you have UPI, which goes from bank to bank. But again, you have banks in the middle. In 2008 or so, we had a lot of distrust of the system because there was this huge banking crisis. There was this huge mortgage crisis in the US, right? Housing crisis, which led to a huge recession in 2008. Basically, what happened was banks were lending out a lot of loans to buy houses. And in the US, in any case, this is a known fact that a lot of people try to live beyond their means, right? Lending is very, very high as compared to the output and the GDP of the society. Economic activity revolves around taking debt. Now, if you take a look at the overall system itself and the way the banks and the governments are structured, usually all governments owe a debt to the banks. They take money as debt from the bank much over and beyond what they are actually generating in taxes, and they keep the economy running. That is why you have inflation as well. Central banks give away money, more and more money is generated, right? There's no limit to the money. And governments can take as much money as they want as debt until the point where inflation becomes high. Then they try to rein it in for a few years. And then you have a little bit of loss of jobs, etc. Because only when there's growth, you have more and more jobs, more and more opportunities. Population also keeps rising. Plus income levels are rising. So you need a little bit of inflation kind of is built into the system. You have a lot of centralization. People at the top are printing money, and people, the masses and the average people are working for that money. What happened with Bitcoin is that in 2008, this white paper was written by an anonymous person who a lot of people have speculated who he is, but no one knows it yet, called Satoshi Nakamoto. And in the white paper, he kind of envisioned an alternative financial system which is not dependent on any centralized entity. Again, the number of and the currency that he termed, which will actually work on this blockchain technology, he coined that as Bitcoin. And the way it is structured is that certain number of Bitcoin will get released over time as transactions happen. Plus, what will happen is Bitcoin, the total number of Bitcoin is limited to 21 million Bitcoin. You don't have devaluation of your currency itself because the total amount of currency that will be in existence is limited. Now, to create a Bitcoin, get Bitcoin or transact in Bitcoin, you don't need, theoretically, as it was envisioned, to go through government controls, right? So that kind of takes you away from the centralized entities, and you kind of control everything through software, and the whole system is written in software. The whole mechanics behind it is laid out in software. So if you can understand what is written in the code, right, and the way it is structured, then that is how it is going to work. So Bitcoin actually was the first blockchain which became popular. Then you had, or the cryptocurrency as you can call it. Then in around 2014-15 is where Ethereum kind of took off. Now, Ethereum is actually run by Ethereum Foundation. There is a little bit of, criticism that it takes, because people say that it is not as decentralized as Bitcoin. Now, that also has a decentralized structure. Decentralized structure basically means you have multiple people running nodes or EVM machines. And because you are running the network and validating transactions, all data storage, everything is on chain. Whatever is required to be on chain as far as the transactions are concerned. Plus Ethereum also, now on Bitcoin you could only do plus minus. That was the usual understanding, that you have financial transactions, you will understand who has how much Bitcoin in their account, and you will know that who has transacted from A to B and B to C, etc. So you'll have a global ledger which is public, right? It's totally public. Now, what is public and private here is, you know that which account ID, key as you call it, which account has how much money. All of that is public. But who is behind each account is private on all blockchains, mostly. Now you have a different way of kind of figuring out who's behind it, because all money, initially when you buy your first amount of cryptocurrency, you may end up having to go through a centralized exchange. And centralized exchanges like Binance, or in India WazirX, etc., they all are required and mandated by government to do their KYC. And now government is also trying to do taxation on all of these transactions. So whenever you take money out and actually convert it into money and you have an income from it, government will tax you, and for that it needs to know who you are. So it is not fully private any further, but more or less you can call it as, if you take extreme measures, never go through a centralized exchange, you can actually have total privacy. Before this KYC and etc. thing started, a lot of information is still quite private, right? So you have huge accounts which hold like millions of dollars or billions of dollars of worth of Bitcoin and Ethereum, which no one knows who's behind them. Now that's as far as the privacy is concerned. See, Bitcoin was only able to do plus and minus, right? Which account has how much. It was able to track transactions and have a decentralized ledger, global decentralized ledger of who has how much money in Bitcoin, right? And what are the transactions that have happened. That is what the blockchain is. There was no way of storing any further data apart from transaction data and finance. Now, apart from this, now what happened is Ethereum came into the picture. Vitalik Buterin is the founder, one of the founders. And what they did was, they were looking at what they can do with Bitcoin to do something more, right? How do you run code? How do you run programs on Bitcoin? But they weren't able to figure that out. So they actually went and launched Ethereum. Ethereum actually has its own programming language that they created called Solidity. And you can basically run code in a decentralized way. All the code is also stored in a decentralized way on the Ethereum blockchain. And you can actually store data also on chain in the Ethereum blockchain. But Ethereum was designed in such a way that most of the data is actually not stored on Ethereum. At least the ancillary data, for example, digital artifacts, as they call NFTs, right? Digital goods. Now, all of that data is usually stored in IPFS. Now, what is this NFT thing in any case? Let's explain that. NFTs are something where you have digital ownership. It's any digital product. You can put an image. It started with JPEGs, which is the most biggest use case even right now. Videos, you have like music files, right? So all of this can be stored permanently. At least that was the thought behind it, in a decentralized way. But what ended up happening in reality on the Ethereum blockchain, because storing data on the chain, because there's so many people have to validate it, right, is actually quite expensive, especially on the Ethereum blockchain. Same thing with Solana blockchain. Data is not actually stored on the chain. Most of the blockchains, data is not stored on chain. What is stored on chain is pointers. And Ethereum is also made in such a way that this pointer will point to, oh, you know what, store data is there. And then it points to something called IPFS or Arweave, which are like mini blockchains or mini decentralized way, which are not really decentralized mediums. And if that goes down, your data also goes down, right? You're left with empty pointers on the Ethereum blockchain, which is not good. But of course, Ethereum NFTs took off. You have Bored Ape Yacht Club, CryptoPunks in 2017, Bored Ape Yacht Club in 2021, which has done extremely well. And then a lot of big projects which have made millions of dollars for the founders, for people trading them.